Hey everyone, it's Dale Anderson from Fabric Property Group. Hope you're well. So some good news. According to Halifax House Price Index, property values continue to rebound as the UK housing market shows resilience. So they're saying the UK housing market continues to show resilience following the sharp downturn at the end of 2022, with average property prices rising again in March at plus 0.8%. The typical house price is now £287,880, around 2% below the peak reached last August. On an annual basis, house prices were up at around plus 1.6%, higher than a year ago, but slowing down from plus 2.1% in February. This is the weakest rate of annual growth in nearly 3.5 years, from October 2019, having fallen markedly since June 2022's peak of plus 12.5%. However, overall, these latest figures continue to suggest relative stability in the housing market at the start of 2023 and align with many other recent industry surveys and data which we've discussed before. This has been characterized by a partial recovery in activity and transactions, especially when compared to the significant drops seen at the end of last year. The latest Bank of England data showing mortgage approvals rising for the first time in 6 months. The principal factor behind this improved picture has been an easing of mortgage rates, said Kim Kennard, director at Halifax Mortgages. The sudden spike in borrowing costs that we saw in November and December has now been largely reversed, and while rates remain much higher than the average of the last decade, across the industry, a typical 5-year fixed rate deal of, say, 75% loan to value is down by more than 100 basis points over the last few months. It's also important to recognize that the labor market's a key indicator for house prices remains strong, with unemployment at historical lows of 3.7% and pay growth continues to look robust. Predicting exactly where house prices will go next is, of course, a bit more difficult and a challenge. But while the increased cost of living continues to put significant pressure on personal finances, the likely drop in energy prices and inflation cooling off more generally in the coming months should offer a little more headroom in household budgets. While the path for interest rates is uncertain, mortgage costs are unlikely to get significantly cheaper in the short term, and the performance of the housing market will continue to reflect these new norms of higher borrowing costs and lower demand. Therefore, we still expect to see a continued slowdown throughout this year, Kennard concluded. So nations and region house prices, the average house price edged up in all the UK nations and regions during March. However, with the exceptions of Greater London and the North East, all areas of the country experienced a slowdown in the rate of annual house price inflation. Northern Ireland continues to report the strongest annual growth in the house prices of plus 4.9%. In Wales, the rate of annual property price inflation has slowed at plus 1%. Similarly, in Scotland, the annual rate of growth fell to plus 2.3%, and average house prices in London are up very slightly on this time last year at only plus 0.1%, with the typical property now costing a staggering £537,250 in London. So housing activity, the HMRC monthly property transaction data shows UK home sales decreased in February 2023. UK seasonally adjusted residential transactions in February 23 were 90,340, down by 4.1% from January's figure of 94,240. The quarterly seasonal adjusted transactions from December 22 to February 2023 were approximately 9.2% lower than the preceding 3 months. And year on year, the SA transactions were 18.2% lower than February 2022. So the latest Bank of England figures shows the number of mortgages approved to finance house purchases increased in February 2023 by 9.8% to 43,536. So your year-on-year February figure was 37% below February 2022, according to the Bank of England. The February 2023 RICS residential market survey results show key metrics remain negative, but less so than previously. So new buyer inquiries returned a net balance of minus 29%, up from minus 45% previously. Agreed sales had a net balance of minus 26%, which were minus 36% previously. And new instructions returned a net balance of minus 4%, which were previous minus 12%, according to the Royal Institute of Chartered Surveyors. So a couple of comments from industry experts. Jeremy Leith, North London estate agent and former RICS residential chairman, commented, after 3 successive months of unchanged annual growth, this respected and comprehensive report confirms what we're seeing on the ground. Falling mortgage rates and expectations that the worst for the economy may be behind us have tempted buyers and sellers out of hibernation. At the sharp end, sales are still being agreed but taking longer, not least because there's more choice of stock. Looking forward, we don't expect to see a dramatic change as we enter the key spring period for the housing markets. However, buyers and sellers utilizing excess savings made during the pandemic, seeking smaller 3 and 4 bed houses in particular, are certainly leading the way. According to the managing director of Barrows and Forrester, James Forrester commented, "It's high time that those spouting prophecies of property market crashes and a 40% reduction in house prices are held accountable." I have to agree. There's, the news doom and gloomers don't really help the situation. But not only has the market weathered the storm of high borrowing costs and the cost of the living crisis, but house prices have already started to rebound following just a few short months of marginal decline, according to James Forrester. So one more comment we have here is from, let's choose one. Let's go for Avinan Nigam, Chief Investment Officer of real estate investment platform IMMO, comments, "While house prices have risen gently over the past month, they continue on a downward trend over the course of the last quarter. Consumer confidence may be increasing with positive news of mortgage rate stability, but improvements in the sales market is not aiding a growing rental housing crisis. With fresh reports of tenants being further priced out of cities, there's an ever-increasing need for patient capital, such as pension funds, to start investing in the rental market, creating an alternative option for Britain's growing rental population." So again, demand and supply, there's a huge demand for rental accommodation, which is driving up rents. The housing market has certainly slowed down. Prices are cooling off, but there's not this massive crash that people have been talking about. So it's positive news for the market. It does seem that interest rates will start to slow down and hopefully come down now in the future. I hope this helps. Please subscribe, like, share, and all the best. Take care.